Hi guys, I welcome you in this wonderful video. So today I'm going to be sharing with you the method that I use to trade a ranging market. So when you see a range now, there is one thing that you have to pay attention into. Firstly, it is to pay attention into the initial move. Now we can see here the market entered in a range, but then before we can start trading, we have to know where it came from. For an example, here the range came from a downtrend, meaning it was the sellers who were in control of the price before it entered in the range. So let me just firstly highlight the lows and the highs. So let me just start like that. So firstly, the range came from the sellers. This tells us a lot. Just understanding where it came from, this will give you a lot of information. So meaning, if it came from the sellers, it means that initially the sellers were strong. And if the sellers are strong and then now we see the market entering in a range, it basically means that now the sellers, they are no longer strong as they were, meaning it's likely that the sellers moved from a level of high strength into a position of weakness. Meaning it's like that the sellers, they were strong before and they were now weak. So if the sellers move from strength to weakness, what does it tell you about the buyers? It means that the buyers from this downtrend, they were weak. But then now, because the market is entering in a range, it might tell us that the buyers, they are transitioning from a level of weakness into a level of strength. It means that now this range positions you or places you into this area or into this center here, meaning the sellers, they were strong and they're now weak, and the buyers, they were weak, they are now transitioning into strength, meaning the range is in between these two things, the strength of the buyers and also the strength of the sellers. So meaning it is likely that if this range gets broken, it is like that the breakout is gonna go into this side, meaning it's like that it's gonna be broken all the way upward. Why? Because it is not like that this range becomes broken downward, because the sellers, they were strong and they are failing. Now this is weakness, so it is not likely that they will bounce again, although it happens, but it is not usually the case. When you see a breakout, once you establish that it is from a downtrend, then the next thing that you have to be looking for, it is the breakout onto the upper side. But then before the breakout comes, the question is, how should I go about executing my trades into this range or inside this range? When you are trading as a trader, you should focus into positions or trades that are very less risky. So then it means that in this range, one thing that you should focus into, once you see a range coming, one thing you should focus into, I know this is a strange thing that you are hearing, but make sure that you only focus on buying opportunities. Don't look for selling opportunities here, even if you can see the price bouncing high, going down, but just do yourself a favor and only look for buying opportunities, because the probability or the numbers, they are telling us that it is highly possible that the market breaks out on the upper side, because the sellers, they are now getting weaker and the buyers, they are getting stronger. So if you are gonna be selling here, it means that you are going against this possibility. It means that you still trust the sellers even if they showed you that they are getting weaker. It means like you are just ignoring the fact that they are getting weaker and you are still betting on them, which is something very wrong. What you should be doing should focus onto the side which is likely to break out or which is likely to display huge strength. Meaning you should only focus on buying opportunities. Only when the market is showing you buying opportunities, that's when you should be executing a trade. Forget about those highs. Forget about those highs. Focus on buying opportunities. What's the advantage of buying opportunities? Here is the advantage, is that there will be a point in time where you execute this buy, and then after you execute that buy, the magic happens. What is the magic? It is the breakout here. So there will be a time when the breakout happens, and then you are the richest guy in the entire forex industry. Why? Because you followed a simple rule, which is never going against strength. But if you're gonna be looking for selling opportunities here, there will be a point in time where you will become doomed. When is that point in time? It is here. You'll start selling, and then the surprise comes and it's over with you. Ne? It is over with you. Why? Because you were focusing into trading a range using the traditional method of buying and selling. Ne? In a range, you don't have to do that. Ne? This is something that I had to learn the hard way. I used to trade like that, and then there will be a point in time where a breakout comes and it catches me by surprise and it leaves me in tears. But then through this method, you know that you are safe and you position yourself in a very, very fortunate side whereby the time when a breakout comes, it will find you inside the trend. Now, when a breakout comes, it will find you inside the trend. And that's the beauty of it, because it means that you will start trading this uptrend not only once it's visible, but you will start trading it when it is still information inside this range or inside this transition. Now, so this is how you should look at the range, guys. Don't trade both sides. Look at where it came from and then observe and analyze the support in this case, and then take your opportunities from those low points and forget about the ranges. Forget about missing out. You want to miss out anything. Once you find this entry, which is going to be the last entry, there will be an opportunity that you make even an amount of profits that you never imagined. So just keep on focusing on the lows and then buy when the market approaches that high. Observe it. If it goes down, you can close your trade. If it breaks out, just keep on holding. Do the same thing again when it approaches the low. Buy when you see it approaching that high, and if you spot a reversal, then close. So one can ask, when do you know if it's a reversal? Simple. You observe the flow, and then once the flow is broken, you know that it's a reversal. So here the flow wasn't broken, so there was no need for you to close. You could only close once the market start to form minor highs and lows outside this breakout. But here this wasn't broken, the flow wasn't broken. So as long as the flow wasn't broken, we don't close, we hold until, I don't know, until this entire upward move starts to show you some strange thing all the way up there. And until you see these huge correctives coming in, then that's when you have to close all the way around that area then. And then the same thing applies. You see a range again, you just do the exact thing that I told you. You observe where it came from. It came from the buyers this time, meaning that, okay, the buyers, they're getting weaker, so it's time to bet on the sellers. Then we just wait for the resistance and we only sell on the resistance, and there will be a time when we sell and then we are on the bright side again. Same thing applies when you see the next range coming in. You wait for it to be formed clearly, and then look at the side which is likely to break out, and then you bet on that side or you open positions on that side. So I hope this video, guys, is gonna be very, very helpful. This is a method that I use to trade ranges, and it has proven to be helpful and to be so profitable. So I just encourage you to use this method, to try it out and see how it's gonna take you. So thank you for watching this video.